So you're finally ready to take the leap of becoming a homeowner, but you've got lots of questions. Well, that's why I'm here. Continue to watch to the end because I'll be sharing my top 5 first-time homebuyer preparation tips guaranteed to get you ready to buy. Hi, I'm Natasha, a licensed realtor in Georgia and South Carolina, and here I discuss real estate and have real conversations. So you're ready to buy your first home or property, but you don't know where to start? Well, you're in the right place because today I'll be sharing my top 5 first-time homebuyer preparation tips to get you ready to buy. I know. Everybody wants to start by searching homes on the internet, but not so fast. Would you go shopping without knowing how you plan to pay for your purchase? Well, buying a home is no different. So here are 5 key steps in preparation for buying your first home. Knowing your credit score is important, so you'll want to find a place where you can get your most accurate credit score. So try to stay away from places like Credit Karma, which basically give you a Vantage score. A Vantage score is typically off by 100 or so points, and it's not your most accurate score. Your most accurate score will usually come from one of the 3 nationwide credit bureaus. That's Experian, Equifax, and TransUnion. They all have their own individual platforms that you could subscribe to that will give you at least one of the scores from their reporting. But there are several other options out there so that you can continue to keep up with your score and make sure it's the most accurate. You also want to make sure you get a copy of your credit report so that you can check to see if it's accurate, complete, and up to date. You can also keep an eye on your credit score by subscribing to services like myfico.com. MyFICO.com provides your FICO score, which is the more accurate score. And this subscription could cost you around $20 plus. I've also found that many of the banks that you bank with will give you your FICO score. I personally have a bank where it shows me my FICO score and I can check it anytime that I log into my banking profile. So that's something to look into as well. Income and savings. This one is a biggie. Every home buyer is different, and to keep from stretching your budget too thin, it's recommended that you don't spend more than 28% of your gross monthly income on your mortgage. This is essentially what you bring home before taxes and any other deductions. For example, if your gross monthly income is $5,000, you shouldn't spend more than $1,400 on your mortgage payment. 5,000 times 28% equals 1,400. This is your gross monthly income times 28% equals your monthly mortgage payment. Savings. Ideally, you want to save at least 20% of the home purchase price so that you don't have to pay private mortgage insurance. However, most first-time home buyers will pay lower than 20% because saving for a home is a little bit more challenging. And guess what? That is okay. So most first-time home buyers will pay or save anywhere between 3 to 10%. However, you have to keep in mind you will still have to pay private mortgage insurance. Now, when thinking about savings, you want to keep things in mind like down payment. Think about how much you'll be able to save for that. And again, it's going to depend on your loan type, which we'll get into a little bit later. Think about closing costs, which we're also going to talk about a little bit later, but closing cost is between 3 to 4% of the home purchase price. You'll also want to think about things like moving expenses, which sometimes first-time home buyers don't calculate into their budget. Next, closing cost. So as mentioned before, you want to save between 3 to 4% of your home price for closing cost. So let's walk through a little bit of an example. Say you're interested in a home that's $289,000. Well, let's go with 3% is what you're going to save for closing costs. You'd have to save at least $8,670 for your closing costs. So I know you're probably wondering, what exactly is included in closing costs? Closing costs can include things like lender fees, your application for the lender, the processing fee the lender charges you, the loan origination fee that the lender charges you. Also, mortgage points. You've probably heard a little bit about that, but mortgage points are something that you could use to lower your rate, but those do cost. The home appraisal, title insurance, home insurance, title search, property taxes, HOA fees, and more. Now, if you're hanging in there and you're really enjoying the value that this video is giving, do me a favor and give it a thumbs up. Next is loan types. Now, the reason loan type is here in my top 5 first-time home buyer preparation tips is because it's imperative that you know which loan type is best for you and your savings based on those first 3 tips that I gave you, which were credit score, income and savings, and potential closing costs. And the best way to know what those 3, or at least those 2 things are, is knowing which type of loan you're going to take advantage of. Now let's walk through some of the loan options. The following are commonly used by first-time homebuyers. That's an FHA loan, VA loan, USDA loan, and even conventional loans. FHA loan. An FHA loan is a mortgage insured by the Federal Housing Administration, which is a part of the U.S. Department of Housing and Urban Development, with a minimum 3.5% down payment for borrowers with a credit score of 580 or higher. FHA loans are often a good fit for first-time homebuyers or people with little savings or credit challenges. VA loan. A VA loan is a mortgage guaranteed by the U.S. Department of Veteran Affairs. A VA loan can make it easier to buy a home because it typically doesn't require a down payment. Only qualified U.S. veterans, active duty military personnel, and some surviving spouses are eligible for VA loans. USDA loan. A USDA loan is a zero down payment mortgage for home buyers in eligible towns and rural areas. USDA loans are guaranteed by the USDA Rural Development Guaranteed Housing Loan Program, which is a part of the U.S. Department of Agriculture. USDA home loans often also have lower rates. Conventional loans. A conventional loan is a type of mortgage that isn't backed by a government agency, such as FHA or the Department of Veteran Affairs. Conventional mortgages often meet the down payment and income requirements set by Fannie Mae and Freddie Mac and conform to the loan limits set by the Federal Housing Finance Administration. One of the things I've realized that first-time homebuyers don't always know is that you can receive monetary gifts to assist you with your down payment. Now, that will vary depending on the loan type, but if you have a close family member or a friend or anyone who wants to award you with some funds that can go towards your down payment, they are more than welcome to do that. And a lot of first-time homebuyers use that so that they're able to meet the requirements that they need to in order to purchase a home. Down payment gifts. A down payment gift is money given by someone, usually a family member, to a home buyer to help them afford a mortgage down payment or similar expenses like closing costs. To use gift money, you have to follow the rules imposed by the lender or the government agency insuring the loan. Now, this only scratches the surface when it comes to loan type, but many first-time homebuyers typically take this route. Pre-approval budget. Now, the reason that I've left this for the last in my top 5 tips is because by the time you get here, you should have checked off or at least thought about all of the things mentioned previously. So let's recap. You should know your credit score. You should have income or savings needed to purchase a home. You should have closing costs saved or a plan to get closing costs. And you should know the loan type that you'd like to pursue. Back to pre-approval budget. By this time, I've already connected you to my trusted lender who has reviewed your credit report, all of your financials, so that they can provide you with a pre-approval letter. Now, a pre-approval letter is gold. And anytime you're working with a realtor, they will need that pre-approval letter before they even start showing you homes. This shows them that you've already gone through the process and that a lender has told you, based on your financials and credit report, exactly how much budget you have to spend on a home. And this is important so that we could go through some of our tools like our MLS and search homes for you that will meet all of your qualifications and fall within that designated budget. Now, I hope this was helpful. And if you have any questions, and I mean any questions at all, make sure you contact me. And as mentioned before, I'm a licensed realtor in Georgia and South Carolina, and I would love to help you buy your first home. Now, I would love for you to be a part of my community, so please like, comment, and subscribe so that you'll be notified whenever new videos come to my channel. And per usual, thank you and see you again soon.